The bankers came to you with a pitch deck to do nothing. That was like the whole pitch.
Yep. That was 2015, right at the end of fiscal 2015. I had just fired all of my bankers, the investment banking firm, our financial advisors from Montgomery Street Research out of San Francisco. And because they were pressuring me into doing a capital raise that I didn't need, to buy a club that I couldn't buy because I found fraud in their financials. Didn't realize it was money laundering till they were all arrested about 18 months later, but I knew something wasn't right and it just made no sense. We back out of the transaction. They were losing all the banking fees. They were really upset with me. We got into a big, basically screaming match. And I said, y'all are fired. I'm done with you guys. And so we had no financial advisor. The stock drifted down to about, I think around $6 a share, maybe even a little less. And a group from California came out. They had purchased about 2% of the company at the time. And they said, look, we've got this presentation we want to give you. We want to sit down and talk with you. If you will at least, look at this, and if you decide you'll do this, we're going to buy 5% of your company. And I said, well, it can't hurt, can't hurt to sit down and talk. So they came in, they literally handed me a proposal. On the front page said, the do nothing proposal. And I turned the page over. It says, you should do nothing. Buy no clubs. Do not, no expansion, no nothing. No more restaurants, no nothing. All you should do is buy your own stock back until your free cash flow yield is below 10%. And right now, currently your free cash flow yield is like 24.7% or something like that. And so, and they, of course they gave me a copy of the book, The Outsiders. And I said, oh, let me look at this. And I thought, man, this is a great deal. I can make 24% on our cash, and all I have to do is make one phone call every Monday. I'm going on vacation, see you guys. And so I literally call Monday morning. How much cash do we have? $600,000. Okay. Call the broker, buy $600,000 worth of our stock this week. Next Monday, call the office. How much cash do we have? But I really started doing is as I studied The Outsiders a little bit, and as I really started understanding capital allocation better, we said, well, we got this deal we can do that will, we think the return is going to be 60% in the first year. We're like, well, okay, so that's when we developed the hurdle rate. So we need a hurdle rate. If we're going to take on any risk, we want to make 3 times whatever our free cash flow yield is. So today, I think our free cash flow yield is probably around at $55, probably around 12% or something. So if I'm going to do something, I want 36% cash on cash return. It's kind of a minimum. I got to make all my cash has got to be come back to me in less than 3 years, or I don't want to make. Why make the cash investment? I'll just buy my existing assets. And so as we started really working on that, developing that, I said, okay. So if you look in 2017, it's the only year since I took over as CEO in 1999 that our revenues declined. We had a single year decline. It wasn't much, but it was a single year decline. And it's because that was the year we applied the capital allocation strategy to all of our existing assets. And we had a property that was worth $3.4 million. And we were making $180,000 a year out of the club. I'm like, why do we have $3.4 million tied up? And we owned it free and clear. There was no bank loan against it. There was nothing. And we'd had a group that had been trying to buy it from us. And so I called up that group. I said, do you really want this property? They're like, yes. We're like, okay, can you close in 30 days? They said, yes. We closed the club. We closed it. We sold it to them in 30 days. We took the $3.4 million, applied it to our capital allocation strategy, right? So that $3.4 million was making us what, 4%, 4.5%? If we just bought back our stock, I think our yield was still at that time in the 14 or 15% range. So, we could just take the $3 million, buy back $3 million of the stock. If you look since 2015, fully diluted, we were at 10,860,000 shares or something like that, I think, in 2015 when we had adopted the do nothing plan or capital allocation strategies, we call it today. Today we have 9.3 million and change outstanding, and we issued 700,000 shares in the last 2 years 500,000 at $60 a share and 200,000 at $80 a share. And we bought back over 250,000 of the 500,000 at under $60, which is under issue price. And now we're buying the $80 stock back that we just reissued at, I think we bought as low as $52. But basically we've been buying it down from about $68 down to $52. And, we just basically, as we say out there, we buy about $100,000 worth. Every day we buy $100,000 worth. When it's under 60, I try to buy every single day. I have to send an order in every day. So sometimes I'm busy. I may forget, but basically we're buying every day.